In crypto, this word is used a lot. That being said, there are times when we do go back and look at the price activity, and if we look at the history of crypto, we can see that there have been times when the system crashed because of major control mechanisms or because the wrong people had a lot of power. This goes all the way back to 2020, when black swan events caused the system to crash and some cracks to appear in the system. Now is when we start to see the real players who have a lot of power in the market. We knew that market makers are important back in 2020 and 2022. We all know that when a market maker goes out of business, it has a big impact on the market. Yeah, when Luna went down in 2022, that was a big part of the market that just went away totally. I'm a huge D5 player, and I'm also a big stable coin player. Then, of course, FTX, right? How could we forget FTX? It was one of the biggest exchanges and was thought to be too big to fail. They were also thrown around because they had arenas with their name on them. This and that were both sponsored by FTX. Politicians were getting money. FTX was a big deal, you know. It's crazy, though. When we think about how events like FTX can cause people to want to sell, FTX was a market drop of 29%. That's right. The market fell 29%. Earth and moon, right? The market was already going down, but when Terra Luna went down, it dropped even more, by almost 43%. The latest drop in crypto from its high point to its low point was about 36%. A huge amount of shares have been sold. But is it all under control? Is it because of trying to trick you? Well, you should remember that this sell-off began for real on the 10th. Things began to break at this point. At this point, I think things really began to show the cracks in this room. One day, 121% candle. I wrote something on X in which I said that the latest market move was planned. This managed sell-off began on October 10th and most likely caused market makers to lose all of their money. There are no stories or headlines, just huge amounts of cash flowing everywhere. Then we came back in a big way, making one of the biggest bull traps in the history of crypto. Because, once more, low-wick crypto trades are not safe. It also doesn't matter how big the trade is. In February, $1.4 billion was stolen from Bybit, which is the fourth largest cryptocurrency exchange by trade volume. This was one of the biggest hacks in the history of cryptocurrency. When we look at the top 10 crypto hacks of all time, most of them happened at big exchanges. So where else can we keep our crypto besides cold storage? Capital has premium custody accounts, which are one of the best places to store your crypto because they are fully closed loop systems that are meant to keep assets separate and safe. The best thing about this is that if you hold digital assets on their platform, you can only withdraw them in USD linked to a US bank account. This means that you can't join an external wallet, which makes you less vulnerable to phishing or unauthorized transfers. So, if you want to use one of the safest places to store your crypto, you can sign up right now using my link in the description below. If you put $1,000, you'll get an extra $100 in bonus funds. We began to get better, and our improvement was well over 21.5%. We got back important support that was once a big area for us to hold, and everyone thought, okay, so it's over, right? Even so, we began to cut away a bit, as if we were building a floor. It was right around this low of 3.53 trillion that we had our floor. We've moved this level around a bit, even going back to August. As long as it stays above the high from May, everything is fine. Then there was the week of November 3rd, when we sold off even more on Tuesday. And then November 11th was the hammer. We tried to get back on track and take back that support zone. All of it was turned down, and it sold off all the way up to $2.74 trillion. After that, news stories started to fill the area again. OG Bitcoin whales are selling. Sailors are about to be broke. MicroStrategy is over, and so on. We watched as one of the biggest sell-offs ever happened, even bigger than FTX and COVID. Leverage traders lost all their money, the market went down, and major media ran stories about the bear market. I will be shocked if this isn't the bottom. This was one of the biggest changes in the history of this market. The best part is that the percentage drop on the charts looked a lot like it did in April of this year and from March to the summer of 2024. A little more than 30% on Bitcoin caused a huge fear. But why? It's because so much money is now in this market and so many big people are getting into it. People don't think there will be as
much instability, but guess what? There is just as much risk in the space as there was before, but big money is at stake. The only problem now is that the cabal has even more power over this place and how it is used. We saw how Wall Street and the big institutions sunk their teeth into the very small market. When they knocked, we welcomed them with open arms. We need to face the music now. The most important thing we can do right now is to get through the uncertainty and keep our attention on what's important. As the possibilities for crypto acceptance, crypto regulation, and even crypto integration into the current system grow, now is not the time to get scared. They will do everything they can to get rid of as many small owners as they can. This play has been put on for us many times before. Survival of the best is now the rule. It seems like a lot of people on my feed have seen the same thing. From what I saw, Crypto Tony said, this dump was a total surprise. I've spent my whole life learning about technical analysis, but there were no signs. It was pure market trickery, so no one could have seen this coming. If you did, you are a genius. Again, if you look at things logically, after we lose major support, after we jump into the support zone and start to turn it into resistance, you might see a small sell-off back into the support zone we just had, and then all of a sudden it fell below that. It's almost like the floor just fell out from under us. Again, no one could have seen this coming so perfectly. Some people said things like, oh, well, look at this person who sold back in the summer and said, you know, this, that, whatever. Most of those people bought again when the price dropped, but then they had to sell again. To say it again, they did not expect this at all. No one saw this coming. Then there are some people like 0x Nobler who broke the inner cabal and just sold over $1 billion in Bitcoin in 10 minutes. A plan was made to quickly drop the price to 82,000 and get rid of store longs. Another well-known trick, we didn't stop at 82K though. Bitcoin kept going down, now just below $80,000. But now we have DeFi Tracer breaking big world funds and whales getting rid of Bitcoin. Wintermute bought Bitcoin. BlackRock is offering Bitcoin. Grayscale, Coinbase, and Binance are all places that sell Bitcoin. Bitcoin dropped to 82,000 after more than $10 billion worth of it was dumped. It is clear that this is a trick. For the second time, we have the on-chain transfers here. We could see what was going on with blockchain. Now, once more, many people say, oh, well, BlackRock was selling. Since BlackRock is selling, all of the money is leaving the ETF. Exchanges are what I'm really interested in, though. You should know that exchanges do go after leverage deals. I've always said this, you need to know that these exchanges aren't fully controlled because they're open to everyone. They can see all of the situations with leverage. This is also seen by their market makers. As long as you can remember, you've seen exchanges go after leverage dealers. It has been a thing forever. This has been going on for a while, as anyone who has read auras knows. This is the same. Liquidity was what the big platforms were after. It was leverage dealers that they went after, which caused one of the biggest bankruptcies in history, going back to FTX and COVID.